Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian stock market ended the week on a strong note, with the benchmark indices rising for the second straight week due to easing of geopolitical tensions. For the week, both Nifty and Bank Nifty gained 2.1%. Nifty 50 reclaimed the 25,500 mark after 8 months. Among the broader indices, mid-cap and small-cap outperformed benchmark indices and gained 2.4% and 4.3% respectively. Technically, the weekly price action formed a sizable bull candle carrying higher high-low, indicating acceleration of upward momentum, which we have been highlighting in our past weekly bites. Breakout from 6 weeks consolidation between 24,500 to 25,200 levels, supported by across sector participation, makes us very confident to believe that the index is poised to challenge its all time high in the coming weeks. Remember, if the period is very high and once it breaks out, it can immediately go to the upward momentum very fast. Meanwhile, from a short term perspective, the immediate hurdle is placed at 25,800. Volatility along the way, if any, should be used as a buying opportunity, as we expect Nifty 50 to hold key support of 24,900. From the seasonality perspective, July has been favorable month for Nifty 50 since 1991. 70% of the time, July has given returns of around 2.5%, and it has been always positive. On the broader market front, the Nifty midcap and the small cap indices too have resumed an uptrend after 2 weeks and now just 5% away from their all time high. Meanwhile, the northward inching ratio of Nifty 500 by Nifty 100 makes us believe that the broader market would also continue with its outperformance, throwing us many opportunities to invest. Further, current rally is backed by the strong market breadth, as currently 80% stocks of Nifty 500 universe are trading above their 50 days moving average, while 62% of the stocks are sustaining above their 200-day moving averages, highlighting inherent strength. The fund flow data showed that FPI made heavy investments in the Indian market, indicating a positive shift in sentiments. With these fresh inflows, the total net investment by FII in the month of June alone has now reached to 8,915 crore. So any noise what you hear that market can come down, there is absolutely no indication whatsoever, we feel. So keep invested. This turnaround in the foreign investor activity comes after easing geopolitical tension between US, Iran, and Israel in recent days, which has improved global market sentiment, encouraging foreign investors to look at emerging markets like India more positively. An immediate threat to the equity rally lies in the July 9th deadline set by President Donald Trump to reach trade pacts with major US partners. The stakes are high as exporters without a deal will be hit with much higher tariffs than the current 10% level applied to most countries. Decision of US India trade deal is also yet to be done. Currently, India's negotiation team is in US working on the trade agreement. At Waya, we believe FY26 should be the year of growth rebound for India. We expect that the significant monetary easing, tax cut, good agriculture production, and strong recovery in central government capex spending should lead to recovery in GDP growth and corporate earnings. Geopolitical tensions, whether stemming from the trade disruption or regional conflicts or energy market instability, are undoubtedly contributing to the near term volatility. However, when we move past the headlines, Indian growth story continues to look promising. Credit growth and corporate earnings should recover. Infrastructure led capex is gathering momentum. In our view, this is the time to stay engaged and build portfolio with structural resilience. Talking about risk to the market, the Nifty forward PE of 23 sits at standard deviation above its 10-year mean, while mid caps are trading at 40% premium to large caps. Hence, any delay or disappointment in the anticipated recovery could hurt investor sentiments and derail the current market momentum. Hence, the next season results are very important. We are focusing on small cap businesses that have robust earning visibility, prudent balance sheets, and scalable business model. Over a 3 to 5 year horizon, these can emerge as a meaningful compounders in our PMS and multi-bagger strategies. If you are interested in PMS, you can just email us at support@thewire.com. From Tuesday onwards, Waya will be live on small case platform to offer additional ideas on micro cap companies. Wealth management companies will do pretty well. We like 361 and Nuama in that category. That's all for today. Wishing you a profitable week ahead. Thank you.